companies are in trouble. There's one car company, at least this week, is not in trouble. That's
Right.
Tesla,
Yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast. And the numbers have gone up dramatically. And yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018, 17% global market share, including China, that it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So do you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
I mean, can we really be that pessimistic about the likes of BMW?
They're failing miserably. And in battery technology, they're not riding down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months to 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturer, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in capital spending is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big, is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
The question to which everyone wants to know the answer is Tesla stock a pure buy in 2024? Now, in the near term, Tesla's growth may slow and its margins may contract, but Tesla's long-term growth story still remains pretty much intact. Tesla stock is priced for perfection. Well, to be honest and to tell you the truth, the electric vehicle leader could have a rough time. Well, the truth is, Tesla could have a rough time in 2024, the electric vehicle leader. Tesla stock had a great run in 2023, more than doubling in price from $118 to $248. 2022 was not great for Tesla in terms of its stock price, but 2023 more than made up for it, one can say, more than doubling from $118 to $248. So I also want to know how many of you all had invested in Tesla in 2023 and made the double in Tesla stock. But since the start of 2024, the stock price has gone down by 30%. It's again up by 5%. So that Tesla stock is still pretty much good, and it is down 25-30%. Is now a good time to pick up some shares of Tesla, especially when you're getting it at a discount compared to where the stock was 2 to 3 months before. And Tesla's near-term prospects still remain unexciting, and for a time Tesla was on a multi-year winning streak. In 2019, it achieved its first ever full year of profitability on a non-GAAP, which is the generally accepted accounting principle basis, and the electric vehicle maker Tesla followed that with 3 years of record revenues, margins and profitability. So everything was going great for Tesla. As you might have noticed, its momentum in Tesla stock in 2020 and 2021.
It's a little early to count the traditional companies out of it. I mean, they haven't really almost gotten started.
So
the Taycan
that
is how
is
old?
the problem. That is the problem. They have just gotten started, and what they have delivered are cars that don't even meet, whether it's range or other metrics, the Model S circa 2012. Now, of course, there are three other advantages Tesla has. So battery's one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.
But Tesla's momentum faded in 2023, especially in the year's second half. In the fourth quarter, revenue grew by a disappointing 3%, while operating income almost became half. And for the year, revenue grew at just 19%, which is significantly slower than its 2022 growth rate of 51%. So does that mean Tesla has reached its peak? What it can do in terms of growth? Not really, but still, non-GAAP net income fell by 23% as a result of margin contractions, and Tesla faces multiple headwinds in the near term. To start with, the macro environment has become increasingly more challenging after a period of unusual inflation and with interest rates now being higher than they have been in many years. And the former has crimped consumers' discretionary budgets, while the latter makes financing for car purchases more expensive and more difficult for buyers to get. And in addition, the competition has intensified in the last few years as the incumbents auto industry have introduced more EV models. This partially explains Tesla's decision to cut its sales price multiple times in 2023 in an effort to maintain and grow its market share. And these headwinds will likely persist, if not get worsen, in 2024. So it won't be very surprising if Tesla reports even slower revenue growth and further margin declines. And it has already instituted more price cuts in 2024 and could trim prices further in the coming quarters. And this is what it's looked like for Tesla in the near future. But if you look at Tesla's longer term opportunity in the much broader time horizon, while the nearer term doesn't look too exciting for Tesla, its long-term prospects remain bright as it rides multiple tailwinds that could last for years, if not decades. Topping the list is the ongoing transition from internal combustion vehicles to electric vehicles as the world shifts towards a greener transportation model. So while competition in the auto industry is still intense, the market opportunity is vast enough to accommodate multiple players. And as the top dog in the EV segment now, Tesla has an edge in making and selling electric cars. Its ability to aggressively cut its prices in pursuit to more market share rests on the fact that it has already achieved industry high margins. Management's target is to sell 20 million electric vehicles annually by 2030, more than 10 times its sales volume of 1.8 million in 2023. And for perspective, the world's largest automaker Toyota Motors sold less than 10 million vehicles in 2022. And beyond that, Tesla is set to benefit from the ongoing development of artificial intelligence systems which will help to improve its younger ventures like autonomous vehicles and humanoid robots. And in particular, Tesla can employ advanced AI to learn from the vast and ever-growing database collected from the existing Tesla fleets. And the tech company's involvement in the renewable energy business, selling solar panels, batteries, could be another huge area to grow. And in short, Tesla has ample opportunities to grow in the years to come. So it's not like it's going to peak very soon in terms of what it can do. But if you're talking about the just electric vehicle business, for the time being, it looks like it's not going to grow as quickly for the next 1 or 2 years. But you never know, because as interest rates go up, it's not easy for everyone to buy a car. And now if you're looking at a quick word on Tesla's share price, another essential aspect that investors should consider before buying Tesla stock is its valuation. Investors should avoid overpaying for any company even if it has excellent prospects. I think the best way to get in is a time when Tesla stock is trading at a discount. Now, the previous year, Tesla stock doubled. So if you bought in 2022, you would have been doing great. From December to Jan, Tesla stock fell by 30%. So if you would have bought then, it makes it easier for you to make your first 10 to 20% return on Tesla stock. But it's still better when one can get a promising stock at a discount which provides both better upside potential and also a margin of safety. As of this writing, Tesla stock trades at a significant premium to its automaker peers with a price to sales ratio of 7 and a price to earnings ratio of 45. For perspective, GM has a PS ratio of 0.3 and a PE of 5.3. But what GM can do in terms of the next few years, it's not a lot. While Tesla's long-term prospects might entice investors to pay out for the stock, it might not be prudent for them to do so, since any short-term underperformance by the business could lead to a massive contraction in its valuation and its stock price. Now, according to Motley Fool, he thinks that even though Tesla has a great potential in terms of its future, it all depends on its stock price and it all depends on how Tesla is doing today. So if Tesla cannot do that great in this year, the stock price will fall for certain, 100%. So should you get in then? So I think this is all a little bit subjective when it comes to person. I was very happy to buy Tesla stock when I was getting it at a 30% discount in Jan or even in Feb until a couple of weeks before. Now the stock is up 4 to 5%. Now the thing is, it depends on what everyone is looking for. You don't have to really look at the company, and if Tesla stock is down 30% in a month, there is a very decent chance that Tesla stock will again go up sometime in the year. So that is a 30% return you're getting very quickly. So that's why I hopped in onto Tesla stock, and that is what a lot of people are doing these days as well, including Cathie Wood. So according to Motley Fool, is Tesla stock a buy today? Tesla stock short-term outlook might be challenging, but its long-term growth story remains intact. Yet, buying the stock at current valuations might expose investors to unnecessary risk, especially in the volatile macro environment. Now, investors should avoid buying the stock is what Motley Fool has to say. I don't really agree with this because, it also depends. I'm not saying anyone to buy Tesla stock right now at a par value. But if you can get that stock at a discount like we were getting it for 30% a couple of weeks back, well, I would go in, wouldn't you? I would buy the Tesla stock if I can get it at a 30% discount, irrespective of whether I'm going to hold the Tesla stock in the long run or no. Now, a lot of people might call that trading mentality and not investing, but hey, there is a very decent chance if you buy Tesla stock at 30% discount that it will go up at some point in the year. And it also depends on how much money you have, and if Tesla stock goes down another 20-25%, you might want to double up. But yeah, some people might call that gambling, but I don't know. Did you buy the dip in Tesla stock? Please leave a comment down in the comment section. Thank you so much for watching, guys. That's all we have from here today. Please hit the like button and do subscribe. I hope you all have a good day.